Sean Udall, the tech stock strategist. I have to be honest, he's kind of the one that's been pumping the Twitter with me, and he's going to break down his story on the issue as well as take a look at Facebook and a couple other earnings. What I respect about Sean is he does his homework, he does his own numbers, comes out with his own estimates. I don't know how he does it. I think that's going to be my first question for him.
I can't imagine. Like it's got to be that he doesn't sleep.
Yeah, Sean Udall.
Hey, yo.
How you doing? I know it's early for you. How you doing this morning?
I'm fine. The big action's going to be tonight, brother.
Yeah, I understand. Sean, before we go in to talk about some individual stocks here, and I know I've asked you this before, I mean, you're a numbers cruncher, and you come up with your own numbers and your own estimates. You kind of like just stay away from Wall Street. I mean, how do you do that? Do you ask for specific information from companies to do this? How do you come up with these earnings estimates?
Well, it's fairly traditional. I mean, I was trained in the business a long, long time ago. I think there's three things I do, though, that are a little bit different. I think the first thing I always figure out or try to figure out, what is the market opportunity in certain segments for a company? And I don't even know how I started doing this, but yeah, I've got kind of a database and a big data background. So when the whole big data business intelligence movement came around, it was very easy for me to embrace that and sort of start using some of those techniques. But there's a few different ways you can triangulate the number. I mean, you use the analyst numbers, you kind of come up with your own. My biggest thing I think people miss is they miss how sustainable sort of a growth curve can be. I mean, we could talk about Apple with that. We could talk about Google with that. The world is a lot bigger now. So I just think, a lot of times people get caught up and they use TAMs, right? Total addressable markets. And they basically bake in TAMs that would have been applicable 5 or 10 or 20 years ago, and they don't really adjust to the size of the current world, if you will. So, and as you know, with me, I don't get overly wrapped up in one quarter. I kind of try to figure out a year, maybe next year, maybe 2 years away. And then, I focus less on the current quarter, more on the total opportunity. And actually, I think that produces more accurate results over a year or two. I might miss a quarter now and then, but again, we could have an hour-long conversation because how you analyze earnings or bake earnings into a semiconductor model, for example, are massively different than how you would construct them for like a Twitter or Facebook model.
Okay.
So, it's kind of industry dependent.
All right, let's get to the big dog here, Twitter. I'm taking all kinds of heat on the show here. What are you looking and taking some heat in my pocketbook too, but that's okay.
Yeah.
Yeah, you gotta be able to take the good with the bad. What are you What are you looking for, and what perhaps is all these other investors in the world missing out? Well, I guess Dennis thinks everyone's stuck long it. That could be one of opinion. What are you looking at here, Sean, for Twitter after the close?
Yeah, he might have some validity too. I think the short. Okay, so the people that are buying it on thinking that there is going to be a buyout, and I've been on this all time and time again. I don't think Twitter is going to get bought out. So I think he might have some validity. But I mean, if you just look at like short sales statistics, especially on the Reg SHO list and things like that, I mean, you basically got, a pretty big, there's almost 30 million shares of Twitter that are short. What's the float? The float's 500 and some million. It's not a huge percent of float, but it's big. What a lot of people don't see though is the institutional short book, which is the people who make markets and the people who can legally naked short sale, right? Anybody who's a market maker can basically, short sale shares and cover and basically hedge their book. And that short interest is massive. So I think there's kind of almost two books. There's probably the kind of the people who are buying it only because they think it might get bought out. They might be stuck a little bit long. But then I think you've got, I think the institutions are very, very negative. I mean, just look at the trade, right? What's Amazon at? What's Netflix at? What's Facebook at? What's the biotech index at? You kind of see all the what I call the hedge fund hotel stocks. So it's pretty easy to tell what everybody's long and the Momo is driving higher. I mean, just look at the stock chart on Twitter. It's in the bottom right quartile or the bottom right corner. So the stock price certainly doesn't act like people have been buying it hand over fist. As far as numbers, I don't know if this quarter really actually matters that much because, they already affirmed the number. The guide was lower. So I think it's all about the guide. They're probably going to beat the current quarter by a tiny little bit. They'll probably beat EPS by 2 or 3 cents. The revenue number, is probably going to be in line. But I think it's really going to be about the guide as long as they don't. Dennis, here's the thing. I think as long as they guide in line, this is going to be one of these cases where I think an in-line report actually could make the stock go up quite a bit. So the only danger would be do they need to lower the full year guide again? And if they do, the stock's easily got 5 to 10% more pain to the downside. I would hope with Noto being aboard, the CFO, especially he's a pretty cagey Wall Street guy, been around the block a few times. I would hope that the fact that they lowered the full year guide the last quarter, I would hope that they definitely lowered it enough so they don't need to lower it again.
There you go.
So we'll see. I don't know. The market's expecting, what was it, a 4-point move or something? So I kind of tend to be contrarian sometimes. What's the thing that nobody expects Twitter to do? Maybe Twitter is just sort of so-so. There's some positives, there's some negatives. Maybe the stock just doesn't move that much, and they kind of got to earn it out over another quarter. That's almost kind of what I think. I think the stock is probably stuck for another quarter. And then I think the power of Twitter, the power of the platform, the usage case, the fact that their rankings are rising as a website, and the power of the platform, meaning the search deals that they've announced, the Google deal, all that. Again, those things are going to take multiple quarters to come through, and they'll probably look a lot better in a year. After 12 weeks, they're not really going to have a whole lot of evidence to how that's working. So, but that's, so if I have a view, it is maybe it just doesn't move as much as kind of everybody thinks it's going to move, and they kind of got to, keep digging it out of the dirt for another quarter.
Okay. Yeah, Nick Shaheen kind of echoed that same sentiment. Facebook's after the close on Wednesday. What are you looking for in Facebook?
Yep. I think they're going to have a very good quarter. The problem is it's hard for me to be long Facebook here. Frankly, it's been hard for me to be long the stock for a little while. So just looking at, here's what I tend to focus on more than putting earnings numbers together is what's the valuation discrepancy between companies, right? So Twitter is a classic, just beaten up name. It's trading about a 50-55% discount to Facebook. In fact, it's almost closing in on about a 57 to 60% discount to Facebook's valuation. So those kind of things don't tend to hang around a long time. Meaning that maybe if Facebook is really good, maybe that pulls Twitter up. But this is a tough one for me. It almost looks like could they do kind of an Amazon type quarter, right? It seems like the stuff that's been the highest momentum names, they get another big spike, and then those spikes tend to get faded really, really hard. So I guess that would probably be the most likely scenario I see for Facebook. This quarter's probably really good. The people that are in it probably love the quarter. Maybe they run the stock, to 100, 105, or some whatever a spike is on it, and then it has a hard time hanging on to the spike, and it prints a great big black candle, just like what Amazon did.
Okay. All right. We've been on the line with Shaw Udall, tech stock strategist, giving us his outlook for Twitter and Facebook. We'll have some fireworks after the close, and maybe we'll get you on at the end of the week, early next week, and talk about some more earnings. Thanks a lot, Sean. We'll speak to you soon.
Thanks so much, Sean.
You bet. Take care, guys.